A very good afternoon, good morning. Welcome to live market analysis with myself, Giles Cochran, Chief Currency Analyst. Very warm welcome. I hope everybody's doing well. If someone could just let me know that they can see my screen and hear my voice okay in the chat or the question box, that would just give me reassurance that I'm coming through. Yes, thank you, Sarah. Just always nice to have the reassurance that I'm not speaking to myself and getting through. So thank you very much, Sarah. Yeah, Vitesse, thank you very much. Great. Well, I'm really looking forward to this session. There's quite a lot of things to talk about and looking forward to taking us through. So I'm going to start this session quickly because I want to get on with it. So first of all, don't forget that any entries, exits, instruments we're talking about trading. The whole idea of this webinar is not a signal trading service where I tell people what to trade, because obviously, market conditions change. The whole idea of this webinar and the workshop is that I can show you how I, as a professional trader with a professional trading background, go about making trading decisions. And over time, you'll see that way of thinking, and then that way of thinking can help you make better trading decisions. That's the whole thrust and the purpose of these webinars. And it's saving you time and saving you getting caught out on the wrong end of moves and hopefully making more pips. That's the whole point of it. Now, what we're looking at today, we're going to be looking at the RBNZ rate decision, how to trade it. We'll be looking at the Australian dollar labour data that's coming out. We'll be looking at the US dollar. What's the outlook after last week's CPI print? And since I did this outlook, we're also going to look at the University of Michigan sentiment, which was very soft. And I'm just going to run through that, what that means for the dollar. Looking at where next for gold after last week's CPI print, and again, that's going to be, I'll update us on that. There's been a bit of movement since I wrote this sort of midweek last week. And we'll be looking at the US dollar retail sales print does, remain pretty much in focus. And we're looking at CAD as well. So that's the main focus for the session. So without further ado, I'm going to go over to the main screens. And I also want to share with you, in the spirit of Wednesday's workshop, when you find a strong currency and a weak currency, I'm going to start off the session looking at an example of a strong weak currency of a trade I've just entered, just to reinforce the lessons we're learning on Wednesday, and then I'm going to get into the session proper. So I hope that makes sense. Just going to change screens now. Yeah, you should see this screen here. Okay, super. So without further ado, let's get stuck in. Now, the dominant currency sentiment for today I want to share with you is the pound Australian dollar upside. It is a trade I've just entered, and I'll just run through that with you, what's happened. Yeah, here we go. So I've just entered a long in the pound Australian dollar as we've just broken out to the upside. Now, the reason I'm bullish on the pound Australian dollar is, number one, the UK is reopening its economy. It's due a savings boost. Although cases did spike higher in the UK, they have since pulled back, and the hospitalisation and death records in the UK are showing that the strategy of the UK, which is a strong vaccination, 75% of the population vaccinated now, is a good strategy and so far is working. This has resulted in the pound just finding strength. Now, the Australian dollar is weak today for a couple of reasons. First of all, the July industrial production from China has shown a miss. It came in at 6.4% versus 7.8%. Now, big learning point. Remember, if you don't know, Chinese data influences the Australian dollar heavily because a disproportionate amount of exports from Australia go to China. So what that means is many traders will trade the Australian dollar as a proxy for the Chinese yuan. So what's good for the yuan is good for the Australian dollar. What's bad for the yuan is bad for the Australian dollar. So with the news out over the weekend that the Northern Territory capital of Darwin, that's on a 3-day COVID-19 lockdown. Sydney has extended its lockdown into New South Wales with 1 week's extension. Melbourne's extended their COVID-19 lockdown for another 2 weeks. Now, Australia is in a different position to the UK. It's only vaccinated around 19% of the population. It's having to try to restrict social interaction to contain COVID-19. And the Delta variant is more infectious than the standard COVID-19 virus. So that means that that's quite difficult for the Australian economy, and it's likely to weigh on the Australian dollar. So you can see there are reasons for pound strength and Australian dollar weakness. So this is why I have a bullish bias for the pound Australian dollar. Now the technicals are very nice now. I'll just show you the technicals. If you look on the weekly chart, what you can see is that there's been a coiling price action. Note this, when you see coiling price action like this, it typically indicates explosive price action. So you see you have the mother candle, you then have a baby candle within the mother candle, and you then have another candle within the 2nd of August candle. So this is like coiling price action. And so what this means is that price on the smaller time frames is coiling to an explosive move. Now this is a symmetrical triangle pattern. Please go to my blog. I'll just put the blog here, and if you search symmetrical triangle patterns, I have it on my blog, how to trade this pattern. It's blog.hycm.com. Well, let me just, I've just momentarily forgotten the address of my blog, which is no good, is it? So let me just quickly put that on here. Yeah, it's here, blog.hycmlab.com. Go along to this. I put it in the chat section, and I have an in-depth video here about how to trade the symmetrical triangle pattern. So as I go through this, if there's anything you just want to, double check or make sure you get right, this is a very well-known technical pattern, how to trade the symmetrical triangle pattern, and you can use it here, okay? And I go through it in some detail. So do check that out. Now, to be technically valid, you need to have 4 points. So we've got 1, 2 points top, 1, 2 points at the bottom. Now the way it works is from this point to that point, it's called the base of the triangle. Where the two lines meet, it's called the apex of the triangle. And typically you want to see these triangles break out pretty much perfectly where this one is breaking out to the upside. So if this stays above this trend line, expect buyers to step back in. Now the target is the height of the triangle. So you can see this is 1.8700 roughly to 1.900. So that's about a 300-point move. So you'd expect a 300-point move here to about 1.9200. And just see if there's any overhead resistance to look at. Yeah, so you're looking for a move up to about 1.9200 here. Okay. Now, the entry is on a break of the trend line. You could have dropped down on the 4-hour chart, go with the break. So it's possible to re-enter on a retracement lower, and then just look at it on the daily chart. So as long as price stays above here on the daily chart, go with it. And it's possible to look for a little dip down lower. Now, what would invalidate this outlook would be if we saw reasons for Australian dollar strength. So, good vaccine news, good virus news, or anything negative for the UK. So a new variant in the UK, any bad economic news for the UK would change the outlook. So pound Australian dollar, weak against the strong, that is a nice upside potential, and you can use that symmetrical triangle pattern. So I just wanted to mention that to you, and especially as price was breaking out, and I've gone with the break on that trade. Now let's just look at the sentiment. The sentiment is a risk-off market today. Now the reason markets risk-off is because of the weak July industrial production from China, weak retail sales from China, 8.5% versus 11.5% year on year. COVID-19 cases rising in the Asia Pacific region. We've gone through the COVID-19 cases rising in Australia. There's a number of different concerns in the market at the moment. Growth concerns for US companies, virus COVID-19 concerns, concerns over China growth, tapering concerns. So all of it has added to the risk sentiment. If you look on your televisions, you'll also be noticing the terrible situation in Afghanistan with the Taliban overthrowing and taking control of the city of Kabul. That has resulted in some horrific scenes, a huge humanitarian cost. But in terms of the financial impact, it has a very limited financial impact due to the relatively small economic impact of Afghanistan as a nation. It's not expected to be a big impact on risk markets. So the reason for the risk sentiment turning off is, as horrific as the Afghanistan scenes are, it's more to do with the China growth outlook and the COVID-19 cases. So we've started risk off, and we're seeing typical risk off flows. If we look at bonds, we can see that bond yields are moving lower, which is what you'd expect in a risk off market. See that commodities pressured to the downside, the crude complex moving lower, copper moving lower, gold and silver a little bit higher, and that's on the dollar narrative, which we will cover later on. We can see that the global indices are pushing lower. VIX, the volatility index, is pushing higher. Please note this correlation if you haven't seen it before. When the VIX rises, the S&P 500 falls. When the VIX rises, the S&P 500 falls. When the VIX rises, the S&P 500 falls. So the volatility index is a proxy for global risk. And it's a proxy particularly for equity traders. Now, it tells you how they're feeling. Now, remember that what the VIX is actually the volatility of the options market surrounding the S&P 500. When this rises, it means the proportion of puts in the S&P 500 is rising. And so basically, a reason an S&P 500 trader would be increasing their put option, it would be as an insurance against prices falling lower. So rising VIX means investors are fearing a fall in the S&P 500. So that extends out to the S&P 500 to the global indices. So in other words, the VIX is a great instrument to look at to get a sense of what the overall sentiment is in the market. We've started the session moving higher, so that's that risk-off sentiment. We can see equities moving lower, FTSE, NASDAQ, etc., etc. These markets are very, very highly valued. So be very wary about getting in. If you do get in, only get in sensible places. The only index that I'm actively trading at the moment is the FTSE 100, and I consider going long around 70, 80. 70 now, which would be an ideal area to get long as a retest of that broken trend line. The broad outlook for equities remains tilted to the upside, low interest rates. There's also very accommodative monetary policy with central banks obviously embarking on huge QE programs and fiscal stimulus from central governments. But remember, a lot of investors are spooked. Look how high global indices are. They're expecting a pullback. And so at some stage, we're going to get a pullback. And so watch out for that. Okay. Yeah, that's the pound Australian dollar outlook. The other trade I've got running is the Euro New Zealand dollar trade. I just shorted it from a return to this level, and that's because the RBNZ are meeting on Wednesday early morning. Now, that's not necessarily a trade to chase now. I've been sort of looking at shorting the Euro New Zealand dollar as per my Twitter account from around the start of August. Took profit on a couple of clips. I've re-added now, expecting the general sentiment to keep boosting the New Zealand dollar into the RBNZ meeting, but I think that is a lot more nuanced picture now. Looking at the RBNZ, they're meeting midweek. The expectations are from like ANZ, ABS, and BNZ is that the RBNZ are going to hike interest rates 3 times between now and the end of the year. So it's a very high bar for interest rates rising. So I think there's a risk that the New Zealand dollar is going to retrace. So do take a look at this, just take a screenshot of this outlook to help you. But if this is what's basically what to look for, if there's a 50 basis point hike, remember expectations are for a 25 basis point hike, then expect the New Zealand dollar to boost. So that'd be New Zealand yen up, but remember that be careful of trading the yen at the moment, because with the risk off trading, the yen's finding strength. So if the risk off trading remains, choose the Australian New Zealand dollar above the New Zealand dollar Japanese yen. If they confirm those 3 hikes total and 1 more for the first quarter 2022, expect there to be a good run higher in the New Zealand dollar. If they say that price pressure is a point of concern and there's reasons for tighter policy, that's also bullish New Zealand dollar. And if they say that the economic data and the house prices show economies in risk of running too hot, expect that to boost the New Zealand dollar. So if they start mentioning, you know, employment data was good out of New Zealand, the unemployment rate fell to 4% from 4.5%, which is excellent. And we also had the fact that the inflation data for year on year came in at 3.3%, which is the highest reading in 19 quarters. And it's also above the RBNZ's target range. So that's the positive outlook. If that happens, that's New Zealand dollar buy. Now, obviously, I don't know what's going to happen, but I think there is a chance of a dovish outcome. So if there's no hike this week, that would be a clear New Zealand dollar weakness. So you'd expect the euro New Zealand dollar to find buyers. Okay, so watch out for that. If they so that would be euro New Zealand dollar would be a good upside. If they show only 1 more right hike and then maybe 1 more in 2022, that's dovish, and that's euro New Zealand dollar upside as well, or Aussie New Zealand dollar upside. I favour the euro New Zealand dollar pair over the Aussie New Zealand dollar. Australian dollar has some reasons for weakness, as we've already mentioned, okay, which is the COVID-19 cases and the slowing growth in China. So euro New Zealand dollar should find more gains than the Aussie New Zealand dollar. Also, if the price pressure is no point of concern, is a point of concern but no reason for tighter policy, that's New Zealand dollar weakness. And also looking at the house prices, if that's no point of concern for the RBNZ just yet, that's also potential for further upside in the euro New Zealand dollar pair. So the pair I really like is the euro New Zealand dollar. I do like, for the hawkish outcomes, I like an Aussie New Zealand dollar short because of the weakness for Australian dollar. For a really dovish outcome, I like a euro New Zealand dollar long. That would be my preference. So that's what to look forward to. You're all ready, and that will give you the, the heads up about what to expect for that. We're going to go now and have a quick look at the rest of the week. So a couple of things to know. So first thing to know is this where is it here? Yeah, we've got the monetary policy meeting minutes for Australian dollar. Now, that shouldn't be anything bullish for the Australian dollar. If anything, since the last RBA rate decision, we've had more bad news in terms of COVID-19. So if anything, that should be dovish for the Australian dollar, is my expectations, which is why I'm not worried about holding a pound Australian dollar long over the minutes overnight. Now, of course, every event is a risk, and there is a risk that it's more hawkish than expecting. But I think if anything, they're going to have provision in the minutes about what to do if the COVID-19 situation gets worse. And it has got worse. So I think there's pressure for the Australian dollar to remain weaker. Key event is going to be this US dollar print on Tuesday and Fed Chair Powell speaking. Now, let me help you understand what's going on here with the US dollar. Right, let's just quickly jip over to the dollar. Right, this one. Oh, sorry. This one, right? Okay. Now, let me take you on the journey. So, going back about 7-10 days, we saw Fed's Vice Chair Clarida indicate that the conditions for the US to raise interest rates could be met as soon as 2022. We then had a really good non-farm payrolls a week last Friday. And with the revisions, about 1 million extra jobs were added, participation rate was higher, wages were higher. Great. All of this led to that dollar strength, and we saw a lot of dollar strength last week. We then saw a weak CPI data on Tuesday or Wednesday last week. Now, did it change what the Fed was going to do? No. And in the inflation data, there was a pullback in some products that have been more expensive. So, for instance, air flights, that was pulling back. Clothing, that was pulling back. Used cars, that was pulling back. But there was an increase in other factors like recreation. And I think there was a couple of other areas that showed growth in prices. So in other words, inflation was pulled back from the peak, but it was a bit broader than expected. I did an article this morning on that, so do check that out. Now, what that means is that it wasn't enough to change the Fed's outlook. So we saw a bit of dollar strength into Thursday of last week, and then the selling in the US dollar was on the University of Michigan sentiment print. Now, that print showed that consumers in the US were fearful about the future economic growth of the US. Now, the miss was about, I think, 13% lower than expected. So a huge miss, about 80 odd was expected. It came in about 70.1, something around that, going from memory. But the market reaction was quite noticeable. Now, going into the University of Michigan sentiment, markets have been very quiet. They were flat. I was covering the video commentary for the Friday, and it was slow and boring. And we weren't expecting any significant movements from the Michigan sentiment print, but then it missed badly and the dollar sold off. Now, dollar weakness lifts the majors. So one, we were looking at, if the dollar sells off, then we were looking at going long the pound US dollar, long New Zealand US dollar. So both of those were working exactly as, for a quick intraday trade, made sense. The dollar yen pushed back through that clear upside trend line. And the narrative now is this: is the Fed going to taper, or are they going to stay lower for longer? Now, with the sentiment being so weak, that means lower for longer. That means dollar weakness, which means gold and silver strength. So that's why gold ripped higher last week into Friday's close. Now look at this very bullish pin bar. You see here we have the body closing within the body of the previous candle. Now technically, the break of that support level, hold, false break, this tells us that technically markets want to take the gold higher. Now, what will lead it to going higher will be if there's reasons for further dollar weakness. Now you understand that brings us through to Tuesday's data, which is the next big opportunity for dollar weakness. So just looking here, we have retail sales. So we've seen the consumer seems to be a bit weaker. Has that been translated into weakness for the US consumer? 70% of US economy is consumer driven. So the US consumer is a big focus. If this slows down, expect more dollar weakness, expect something like gold upside. Then we have Fed Chair Powell speaking. Now, Powell is dovish. He's more lower for longer. But watch out if he doesn't make a shift. So if he makes a shift and starts hinting at tapering, and the next Fed meeting is the end of August at the Jackson Hole Symposium, if he starts moving to that, then expect some of that dollar weakness to retrace and to have some dollar strength. Now, if these are both, the best opportunity would be if this retail sales data is a miss and Powell is dovish. That will be more dollar weakness, good upside in gold and silver. So gold or silver upside makes sense on a weak retail sales. You see the story, you're following the line, you see how this is going to be working and how this works in terms of the dollar. And where the dollar goes, it's going to be data point by data point and Fed speakers. The market's trying to get, will the Fed taper in August? If they taper, that's the first step before hiking interest rates, so it's dollar positive. If they don't taper, if they're lower for longer, that's dollar negative. If they don't taper, that's equity market positive because they're not going to raise interest rates. If they do hike or look like hiking, that's equity negative because it means interest rates are rising. Companies will have to spend more money to finance their debt. Future earnings will be hit, equity markets will fall. Overnight, we have the RBNZ rate decision. That's going to be key. We've covered that. Inflation, key for the UK, very important. Now, remember, one of the big concerns in markets at the moment is that if inflation gets out of control. So, what will lend more upside to the pound this week is if that inflation data comes in hot. So we got, anything above 3% and expect the pound to really race higher because it will raise animal spirits who will think, well, the Bank of England has to act in order to control that inflation. So any spike higher inflation will be pound positive. Watch out for that. Canadian dollar, again, similar to the pound, there's a broad positive outlook to the Canadian dollar. And I'll just show you why. We just take a look at the global macro outlook for the Canadian vaccination program. Look how well Canada's done in vaccinating their population. Fantastic. 64% of the population fully vaccinated. So Canada should soon boost higher on that optimism over reopening its economy. Now, the last jobs print, which is not last Friday, the Friday before, showed a miss of expectations. Yes, there was about 94,000 jobs added, so that was good, even though it was a miss. But the good news is that most of those jobs were full-time. So the medium-term outlook for Canada remains quite hawkish. So as we come into the event on Wednesday, the CPI data, expect, again, high inflation to boost the Canadian dollar higher. And then potentially you can look to pair it against a weak currency. So if risk markets turn on again, then something like a CAD yen would make sense. But if risk markets remain off, then pair it with another weak currency, so maybe like an Australian dollar CAD. So that would be the way I'd look at that. Thursday, really important, this is employment change. Now, if we start seeing weakness in the Australian dollar, if we start seeing weakness in the Australian labour market, that will have an impact. Remember, the last RBA meeting saw the RBA being quite optimistic. They were focusing on the faster than expected return to economy. They're also confident that once lockdowns end, that the Australian economy bounces back quickly. So they avoided taking a dovish twist at their last RBA meeting. But if there's weakness in the labour market, that will hammer the Australian dollar lower. I think particularly the Australian dollar has reasons for vulnerability on a miss. So if it did miss, then if the RBNZ are very bullish, then an Australian dollar, New Zealand dollar sell makes sense. If there is otherwise something like if the CPI data is higher out of the pound, then a pound Australian dollar long makes sense. So sort of buying those dips. So you have to see what happens in terms of the moving parts. Come along to the workshop on Wednesday. On Wednesday, I will unpick the RBNZ decision and just let folks know what it means, okay? Similarly with the retail sales data. So come along on Wednesday and I will just translate that and help us understand the major narrative Then coming into the end of the week, got retail sales and core retail sales for CAD. You know, they just both go into the general narrative of what's going on for both of those nations. Folks, there we go. That's what to look forward to. We rattled through everything today, which is good. If you've got any questions, please do speak to me. I hope that's been helpful. Don't forget, on Wednesday, we'll go through this again. So if you just want to keep on top of these narratives, make sure you do. And do I think gold, silver is bullish? Do I think gold and silver is bullish? Like, okay, let me just show you how to unpick what's happening with gold and silver. Right. In order to understand gold prices, there's 3 things or 4 things you have to know, Ibrahim. You have to know what's happening with yields. You have to know what's happening with US bond yields. You need to know what's happening with inflation. You need to know what's with the dollar, and you need to know what's happening with the ECB and the Fed. So there's 4 things to really look at. At the moment, gold is moving higher. Why? Because real yields are falling and the dollar is falling. So when you have real yields falling and the dollar falling, that's red and purple. That's real yields, that's the dollar. When real yields and dollars falling, that helps gold rise. When real yields and the dollar's falling, that helps the gold to rise, okay? So if you look back here, you can see turn of 2020, red, purple, real yields, dollar falling, gold rises. Here, red, purple, real yields, dollar falling, gold rises. Now recently, we've been seeing real yields falling, but the dollar rising. That meant that yes, gold was rising, but limited. So gold's outlook is going to be determined by what's happening with real yields. Now that's the US 10-year yield minus inflation expectations. So what makes real yields fall is inflation rising faster than the 10-year yields are rising. So if US 10-year yields are falling and inflation is rising, then that means this falls quick. So that's what's happening here. US 10-year yields were falling and inflation was rising. So that, or US 10-year yields rather, were falling quicker than inflation was rising in that instance, if I recall, but real yields are falling fast. So what you want to look at, Ibrahim, is if we see real yields falling and the dollar falling, expect that to support gold. Now, I've shown you that gold has an incredibly bullish technical setup. That is probably one of the most bullish technical setups I've seen on the chart. In fact, it's the most bullish technical setup I've seen, wow, you know, since, you know, for probably ever, you know, certainly in the last 10 years, right? That is a near perfect technical setup. Body within the body, the previous. Now, that is not enough for me to go long because, you know, I'm a macro trader. I'm trading on the fundamentals and the technicals. So I acknowledge that strong technical signal. If I saw like a terrible retail sales tomorrow, that will be enough for me to go long on gold. Okay. And I'll expect at least a move up into that 1815 region, technically. Ibrahim, I hope that helps. Salim, check your microphone. Salim can't hear me. I think everyone else can hear me. So I'll send that to Salim. Vitez, US dollar yen buy is still making sense. So yes, with the following caveat. So first of all, notice, look, that trend line was what I was using to go long. I took profit on both my positions to that 110.50 region, Vitez, okay? So then we saw that weak University of Michigan sentiment. I tried another little long here, and my stop was just sort of just shortly here, so I took the loss. on that. Where I consider entering in again would be here, a retest of like 109. So I'd look at a retest of 109, stops below 108.60. So gun to my head, I expect this to go higher. But look, if the retail sales are weak, Vitez, then, you know, there may be more reasons for US dollar yen downside. We're seeing yen strength from the risk off trading. So, you know, from a medium term perspective, then, you know, the best level would be like a retest of this 108 level. But in the short term, I would consider 109 as another potential area to go long. Okay, or back above this 109.80 region, go long, stay above, stay with it, get back below, exit. Do you see? And what you're looking for here, Vitez, is you're looking for confirmation that the Fed's going to taper. If there's any confirmation of tapering, so the sort of thing that would change this would be, say the US retail sales was really strong, I'd go long US dollar yen at market. I hope that makes sense. Nimble is the name of the game. Thank you, Sarah. I'm glad that was helpful. Don't forget, Wednesday, I'll be going over and keeping on top of these narratives. We've got to keep on, what we've got to do, Vitez, at the moment with this dollar is keep on top of it. Okay? It's just keeping on top of the narratives. And being nimble where we manage risk. So you see here, went with the break on the non-farm payroll, took profit in the resistance, dipped lower, thought you could easily see some support on the retest of the trend line. Right, okay, I've been a bit, okay, my trend line's a bit skewy here, please forgive me. But you see here, just a retest of that trend line, took a long, okay? Stops just low, took this hit. Get back below, I'm not interested in the dollar yen, okay? Next area I'll be interested is 109. Always think, how do I manage the risk? How do I limit my risk? Even when I've got a bias on a pair, how do I manage the risk? So a bit like with the pound Australian dollar, the trade I've just entered, I'm thinking, how do I manage risk? Well, I can manage risk sensibly here by using this symmetrical triangle. So you can see here, stay above, stay with it, get back below, you can exit. Yeah, that's great, Vitez. Super. That's it. Good. Lovely. Thank you very much, everyone. Been a pleasure as always. Take care, and I hope to see some of you on Wednesday. And don't forget to follow me on Twitter, Giles Cochran, at Giles Cochran CCA. And I do put the odd post up there as well as my blog, and I'll keep us updated. And I will have a blog on my blog tomorrow about how to trade the RBNZ rate decision. Okay, folks, take care now. Thanks then. Goodbye.